And David, we have some breaking lines in terms of China's April manufacturing data. PMI coming in at 50.8. That was below the estimates, just marginally. The estimates had been for 51. Still in expansionary territory, of course, after that terrible print in February. You got about 52 back in March. This is the April number. China April manufacturing PMI at 50.8. In terms of non-manufacturing, we're looking at expansion there, 53.2, above the surveys for services in terms of services and construction. Non-manufacturing PMI for the month of April, 53.2. Manufacturing PMI, 50.8. Let's talk about this data and get some more insights with our next guest. So we've been saying China has been ahead of the rest of the world in terms of virus prevention and in terms of easing up some of those restrictions. Our next guest says a full recovery does remain, though, an uphill battle. Charlene Chu is a senior analyst at research firm Autonomous and joins us from Washington. Charlene, thank you for your time this morning. Your reaction to this PMI data?
Well, I think we've had a lot of questions from investors over the last couple of months in terms of how can these numbers even be above 50 to begin with, given that everything has been shut down. But we need to remember that these are month-on-month figures, and what was happening in April was we were still opening up in China, and in particular Hubei province and Wuhan were opening up, and that really did trump the drag that we were seeing overseas and the collapse in demand. Now, we expect that in May, we are not going to be having that kind of uplift that we've seen in March and April in terms of reopening in China, and this collapse in overseas demand is probably going to become more forceful, and our outlook is probably for PMI to be lower, below 50 next month.
Charlene, excuse me, David here in Hong Kong. You know, almost
Hi.
Right on cue, as you mentioned, external demand. The sub-gauge for new export orders on the PMI fell back to 33.5. Now, the external weakness is something that we are to expect anyway. I think my question for you, is there anything actually that Chinese authorities can do about that part of the economy?
To be honest, there's not a whole lot they can do in this environment. I mean, this is really about demand overseas collapsing due to lockdowns, and until these economies in the U.S. and Europe reopen significantly, not on the margins, we are not going to be seeing demand coming back in China, and our expectation is that that will be happening at the earliest June and probably more Q3 in terms of getting a real return to normal for that export sector in China. So we have got another wave of pressure on the Chinese economy that's coming, and I think that brief respite that we had in March and the first half of April is going to be meeting a new reality over the next couple of months, and this raises a whole host of questions about renewed pressure on small businesses, on unemployment, and the fact that to date we still don't have a very aggressive response from the Chinese authorities to the drag on growth.
Charlene, you've sounded the alarm multiple times on the debt story, and to be fair as well to the other side of that argument, it hasn't really been a big issue because we've had growth in China, which tends to obviously make people not pay that much attention to the debt story in China. That's really been sort of the narrative the last 10 years or so. That changes substantially this year because you don't have any growth. Are you confident that China can prevent that from becoming a market event?
I think the way you phrased it was very good, which is debt doesn't matter when you're looking at nominal GDP growth in the upper single digits or the lower double digits, which is effectively where we've been for the last 10 years, obviously volatile around that. But we are in a very different climate today, and I think if this coronavirus shock really is isolated to the first half for the entire world, and we can all get back to some semblance of normal. Obviously, we're not getting back to where we were in January, but even if we can get to some semblance of where we were, I think Chinese banks are definitely going to have some problems with asset quality, but it doesn't necessarily mean we need to be having any type of financial crisis. But if we're talking about a very prolonged situation where the world is going through different phases of rolling lockdowns for the next 18 months, and the manufacturer of the world, China, is hit by this in terms of just no external demand, then that is a very difficult climate for banks. And even before the coronavirus hit, we were getting questions from people about, is 2020 the year we're going to see a wholesale cleanup of small banks in China? Because as you know, we had our first 3 interventions in small Chinese banks last year, which are the first ones in decades. And the authorities have been signaling that there's several hundred banks that are not in great shape, and that was before the virus hit. So this is not a good mix, and I think these debt problems are definitely something that needs to be on the radar for everyone in a climate where we're talking about growth being under so much pressure, potentially for a prolonged period of time.